Hey everyone, welcome back to the channel. Or if you're new here, hi, I'm Shakelia LeBlanc, aka the Loan Slayer and your mortgage advisor. Today we're diving into everything you need to know about buying your first home. I understand the mortgage process can seem super overwhelming, especially for first-time homebuyers. But don't worry, by the end of this video, you'll feel confident and ready to take on this exciting new journey. So whether you're thinking about buying a home soon or just want to get prepared, stick around. I'm sharing my top tips for first-time home buyers. Tip number 1. Before you start browsing through listings, please understand your budget. Now, this advice is twofold. On one hand, you need to sit down and figure out what you're comfortable spending and forget about keeping up with the Joneses. You have to decide what you can truly afford monthly, including mortgage, taxes, insurance, and unexpected home repairs. I tell clients all the time, I will always be here for you, but I will not be making your mortgage payments when the deal closes. Now, on the other hand, make sure your budget is realistic, especially for your market. If the average price point of homes in your area is $400,000, then realistically, you're not getting a mortgage for $1,000 a month. So be honest with yourself. Take a deep dive into your finances, review your income, your expenses, and your savings. Knowing how much you can comfortably afford will guide your search and prevent any financial strain down the road. Tip number 2, check your credit score and review your credit report. This is probably the number one concern a lot of first-time homebuyers have. But you'll be surprised about how many people do not know where they stand credit-wise. Your credit score plays a significant role in securing a mortgage with favorable terms. A higher credit score equals lower interest rates, which means more money saved. Check your credit report early on and address any errors or issues. You should not be surprised by anything when a lender pulls your credit because you should know your credit profile better than anyone else. You should know if there are any collections. You should know if there were any charge-offs. You should know when the last time you were late on any account, if at all. You need at least a 580 mortgage score to get an FHA loan with 3.5% down. But if your mindset is what is the minimum credit or minimum assets, trust me, you're actually going to pay the most. I want you to aim for at least a 640 mortgage score. It will save you thousands of dollars, trust me. I did a video all about credit. I'll include that link in the description box below. Check it out. Bonus tip, before you get your credit pulled by any lender, add your name to the do not call list to avoid hundreds of calls from online lenders afterwards. Tip number 3, don't settle for online pre-quals with random online lenders or banks. Get a pre-approval from a trusted lender because there's a big difference between a pre-qual and a pre-approval. To be honest, Mickey and Minnie Mouse can get a pre-qualification. All they have to do is tell the bank, I make $50,000 a month and I have $2 million in assets. And some banks will say, yes, you're pre-qualified without doing any additional verification. But if Minnie and Mickey Mouse go under contract, they are not going to get very far in underwriting when that information cannot be verified. However, with a pre-approval, the loan officer will verify that information up front before you begin shopping. So they'll review documents like your paycheck stubs, W-2s, bank statements. They'll collect your ID. So if a lender didn't ask you for all of these things before you got your pre-qual or pre-approval, red flag. A pre-approval is definitely the gold standard in your ticket to go home shopping and for sellers to take you seriously. Sometimes you will even see where some sellers may not want to take an offer where the pre-qualification comes from certain institutions because of their reputation to be unreliable, or they know that that lender may not have done their due diligence. So definitely make sure you get a pre-approval and not just a pre-qual. Tip number 4, be careful with down payment assistance. I know. As a first time home buyer, you may be looking for down payment assistance options, and most states have some type of home buyer program, and there may also be programs available directly through your lender. But I urge you to do your research and make sure you understand the terms and qualifications of these programs. This is not free money. There are probably strings attached like higher interest rates, a second lien on your home that has to be paid back if you don't stay in the home for a certain amount of time, and income restrictions. There are additional fees. So you need to understand the program and then decide if this is a good fit for you. To be completely transparent and honest, it is usually better for you to save up your own down payment and negotiate a seller credit to help with the closing costs. This will probably end up saving you way more money overall. Outside of saving your own funds, some other options to help you with your down payment include getting a gift from a family member or pulling from a retirement account. Consult with a financial advisor about this, but you should be able to withdraw up to 10K without the extra 10% penalty if the retirement funds are used to purchase your first home. As far as what is required for down payment on an FHA loan, it's 3.5% of the purchase price, conventional 3% of the purchase price, and you can get a USDA or VA loan with zero down. Now, in addition to the down payment, there are also the costs associated with getting the loan done. And sometimes I find that clients do not think past that. So tip number 5 is factor in additional costs. Some of them are upfront costs and others are paid at closing. When you go under contract, you have to put down an earnest money deposit. Now, the amount will vary depending on the market that you're in. This could be a flat fee of like $1,000, which is common here in South Carolina, or it could be a percentage of the purchase price, especially sometimes when you're working with new builders. Then you have the home inspection and the appraisal. So even if you are getting some type of assistance, you have to have the money on hand to take care of some of these upfront costs. Additionally, you need to consider closing costs. Closing costs include your lender fees, your title fees, and attorney fees, HOA transfer, and setup fees. You will usually pay 1 year of homeowners insurance, and there will be funds allocated to set up your escrow account for insurance and your county or city taxes. Closing costs, they probably average around 2.5% depending on where you are buying, but can be a little higher in some cases, around 5%. Please make sure you take this all into consideration. Tip number 6, think long term. Think about your goals and what your future looks like. Are you planning to start a family? Do you foresee any career changes or relocations? Is this going to be your home for the next 3 years, 5 years? These questions will not only inform where you choose to live, but the terms of your loan, specifically if you are considering buying down the rate. You don't want to buy it down or buy the rate down too much if you are going to relocate or refinance before you recoup those costs. It just wouldn't make financial sense. So make sure you think about long term what you're going to do before you make that decision. Tip number 7 is when you are purchasing new construction homes, Make sure you have your own team, your own realtor, your own inspector, your own lender. If you use the sales agent or the builder's lender, especially if they own the lender, remember, they do not work for you. They work for the builder. They do not work for you. They work for the builder. So they are not always looking out for your best interest. They're going to look out for, their employer's interest. Make sure you have your own team when you are going to go shop for new construction homes. Speaking of team, tip number 8 is when you have your own team, make sure you trust them. It's so important that you find a loan officer and a real estate agent that you can trust. And when I say trust, I mean it's someone that you are comfortable with, that you trust the information that they're sharing with you, that you know they have your best interest at heart. And when you have a realtor and a lender that you trust, listen to them. They're the expert. Don't listen to your coworker, your uncle, your cousin's best friend's auntie, or someone that purchased 10, 15, 25 years ago. Make sure you trust the team that you have decided to work with. Now, my final tip is have a healthy mindset around purchasing. Make sure you trust yourself. This is a really big decision. If you don't feel comfortable with something, or if something feels a little bit off, make sure you express those things to the people that you're working with. Make sure that you're confident in this decision. You don't want to have buyer's remorse after buying a property for a few $100,000. So, have a healthy mindset and trust yourself. Speak up for yourself. Ask all the questions that you have and advocate for yourself. So there you have it, my top tips for first-time home buyers. I hope that you have found this video helpful. I hope that the tips that I've shared have or will make the home buying journey a lot smoother for you. If it was helpful, I need you to hit the like button because I heard that it really helps with engagement. So give me a thumbs up. If you have any question, leave me a comment below and I'll see you in the next video.